Okay, we are now beginning lesson 4. And this one is where we start really getting into the meat of the material. To those of you who have followed these little videos, I'm going to do a quick lesson on the software packages that are used, that I use and I recommend. Then the next lesson is going to be on how we modify the price charts to really focus in on some of the information that is there in order to know when to enter and when to exit out of a transaction. Then I'm going to do a case study where we go real data, no pie in the sky, no sunshine. We look at a graph and we really focus on how things set up, how we got into it, how we went through the time that it took, and then the choices that we made to get out. It's in the book. If you want to buy that book, I recommend. Anyway, getting back to today. Software packages. There is a place on the YouTube. It's called finviz.com. And the research that I did was, I just wanted to see if there was instructions there, and there are. And FinViz is financial visualization, is the words that they have shortened up and mashed together to create finviz.com. I am not going to teach that site. That is a lesson in and of itself, and there are people that do that much better and much quicker than I would. Also, too, I'm sure you can even find probably books on Amazon Books or Barnes & Noble that would go through all of that. Another big website package is investopedia.com. There are encyclopedias that have been around forever. Everybody knows what an encyclopedia is, just basically a compendium of knowledge. Investopedia is investing knowledge. And terms, people, rough concept sort of introduction, you can get lost for months, maybe even years, looking through Investopedia and just start reading through. A lot of financial textbooks refer to Investopedia. That's how I found this site. And so I'm suggesting that you would be well advised to go look there. Another item that is on Investopedia are the key ratios for fundamental analysis. They have a beautiful, short, quick, one paragraph sort of explanation on what a pay to earnings ratio is, what a return on investment concept is, what your net or your gross earnings are going to be. These are all terms that you're going to run into, and when you do run into these, I'm not going to talk about them because, again, there are people that do much better than me. I'm just saying this is where you go to find out your answers. I don't want you wandering around in the swamps. You'll get lost real quick, and that can be very discouraging. If you know where to go to get answers, you can, oh, what's this? 2 minutes later, you're back and you're moving along again. So, Investopedia. Another area that you can go to is blogs. And what those are is the sites where people do chatting leave their comments about a given topic, given company, how a situation is setting up for some kind of a trade. And I'll just start throwing you off the deep end right now. These setups can refer to foreign exchange, to futures, to options, all sorts of stuff. If you run into stuff that is way beyond you, don't worry about it. Starting with stocks is the simple way of doing things. Speaking of all these different types of investment, the general aphorism or rule of thumb that I was told once was that in the stock market, you put $1 in, you're going to get $1 gain back. For options, you put $1 in, you will get $10 gain back. For foreign exchange, you put $1 in, you will get back $100. For futures, that is a whole nother can of worms. And most of the time, the people that are messing around with futures are in very specialized sorts of things. Grain, beef products, mining. It's where you take out a contract on some future situation and hope that you make a good futures contract. And if you don't, you're going to lose, a ton. So be very careful of futures. However, getting back to blogs, they cover all sorts of topics, all sorts of companies, all sorts of people, you name it. One of the biggies is Warren Buffett. And to the best of my knowledge, he never takes total controlling position in one of his investments. He will take a minority position and let the management run. He may put one or two of his people in, board of directors, accounting, something like that when an opening comes up. But for the most part, if a company is good, he just lets it go. And so Warren Buffett, he is, of course, one of the biggies in the field of investment. And you can find all kinds of stuff about his philosophy for investing. He's kind of a buy and hold forever sort of guy. He's into Wells Fargo Bank, Great Northern Railroad are two of his favorites. And speaking of Warren Buffett, one of the things that he checks just to see how the transportation industry is doing, he likes to count, I've heard, empty boxcars on the Great Northern Railroad. It's a rather unique little bit of information, but it gives him a handle on whether things are good or not good. Another guy, he was, I believe, a major financial person with General Electric. This was when they were making light bulbs, and he wanted to know how the light bulb industry was doing. And so, because they made the product and they knew what their competitors were doing, why, he counted light bulbs. This is, some of the weird stuff that goes on in finance. Anyway, one of the things that you're going to find probably when you go through the blog section of learning all this stuff is a little concept called exchange traded funds. This is where you take a group of companies, healthcare, airlines, boat manufacturers, car companies, and they will mash them all together and make an exchange traded fund where it's kind of like treated as if it was a municipal fund. Everybody knows what that is, I hope. But it's specialized to just those particular categories. Later on, this actual case study that we have that I'll be looking at next lesson, I hope, get there. I was wanting a pretty picture for the front of the book here, this graph, price chart. And I didn't know where to go. I was just in the dark. So I thought, what about airlines? Something's got to be going on in the airlines. And so I went to the Exchange Traded Fund for Airlines. It took me all of maybe 2 minutes on the internet to even find that Exchange Traded Fund. I just put in Airlines Exchange Traded Fund. It came right back with what the symbol was, and then I went and popped it up, and it gave me just a total number for all of the airline stocks, which was not what I wanted. So then I clicked on the symbol, and that opened up, and there was, I'm guessing, 10, 15, 20 different stocks. All I wanted was the one that was at the top, the best performing airline. And I went then to their site and looked at their price chart. And you can drill down through exchange traded funds so quick with that little procedure. Speaking of procedures, I should kind of stop for a second here now and talk about why are we doing what we're doing? Stock markets go up and down forever. And if you look at it over a long period of time, I'm talking 100 years or something, it never goes to the moon and it never crashes to nothing. It just stays rolling along. There are waves in it as the economies and politics and stuff happen. So what we're trying to do is play the game of riding the stock market waves. We don't want to take big losses. We have, it's called putting in protective stops, where you say, if it drops 5%, I'm out of it. You're going to lose a little bit, but you've saved your bacon. You have taken a slight loss. That's normal. It happens. It will always be there. If anybody tries to tell you that it's never going to happen, run away from them, because it will happen, even to the best of people. Then there are, the markets go kind of sideways for a little bit. In this front picture here, there's a little section in here where it goes sideways. And there's another section up here where it kind of goes sideways. That is normal. There's going to be slight losses or slight gains. And the thinking is that they're going to offset each other. And what we're looking for is this big overall ride. If you have no losses, no big losses, little losses are offset by little gains, and you have some big gains, you're going to come out of it smelling like a rose. And in the very last page of this book, which I will talk about in the last lesson, there is a spreadsheet that I whipped up that explains just how lucrative this can be. Okay, ETFs, blogs, lookup symbols for the old ticker tape symbols. On the price charts that we're looking at, they still use those designations. However, not to worry. With modern computers, we're slowly transitioning away from the ticker tape symbols, and we're getting to just the company names now. So don't have the opinion that you need to learn big quantities of information. You don't. Okay, that's some of the software packages we're going to, oh, the last one I want to talk about, the software package, is yahoo.com financial portion of Yahoo. They have such an incredible mountain of, I mean, it's bigger than Mount Everest, literally. All of the financial information that's on Yahoo. There is also an equal amount of information on Google. The difference between the two is, on Google, they want to know who you are, your email, etc., etc. On Yahoo, they don't care. They will give you anything and everything, the kitchen sink, and they'll be happy to do it. So, because nobody is sniffing my underwear, I tend to go with Yahoo. And I hope nobody's offended by my terminology there. Okay, investing styles. There is day trading, there is buy and hold, and then the third style is called swing trading. On day trading, the Securities and Exchange Commission in the United States has said, big if now, if you do 5 full round-trip trades per day for 5 days, total of 25 trades, you are going to be hammered beyond comprehension. And what that means is they're going to call you a high-frequency trader, HFT. If you get that little designation on your account, you're in a world of perpetual, never-ending pain and hurt. They're going to want $25,000, the last time I checked, of a deposit by your broker, which will then travel with you to wherever you go, whatever broker. You will get 0 interest on it. Your broker will get to use that money to trade for whatever, and you'll never know what's happening. You just have $25 on deposit for being a day trader. The Securities Exchange Commission truly hates that kind of in and out activity. It is, from their point of view, a total unacceptable way of doing things. Another term for that type of trading is called a day scalper. And you're out there trying to give everybody a haircut and take their scalps. And my thinking is, if you do $200 in profits per day for 5 days a week, you have made gross $1,000. Times 52 weeks out of the year, that's going to get you 52 grand. To do that, you have to sit at your computer with the absolute fastest, up-to-date information possible and hope that you can do things before somebody else catches what's going on. And you're not going to be able to go to the restroom. You're not going to be able to talk to your spouse. Your dog is going to mess on the carpet. I mean, it is not a good situation, both at home, with your broker, with the government. Don't even go there, particularly for those that are just starting out. Eventually, someday, you might want to do day trading. It's common practice in foreign exchange. And by then, you'll be up to speed enough so that you know what you're doing and there's no restrictions on you then. Okay, buy and hold forever is pretty much what it says. The thinking there is that you are going to put money in every month, every paycheck, whatever, just keep doing it forever, into a mutual fund or something. You don't necessarily have to be a financial person to do that style of trading. You can have a fund manager take care of it for you. When you get done, after 20 years, 30 years, whatever, you're going to have some huge nest eggs sitting there. And it can be very, very nice. In that kind of trading, a lot of the mutual funds are put into municipal power companies, school districts, those sort of things that will have dividends coming. And as you build up your account, your dividends payments build up. And so at the end, when you finally start to, I don't know, retire or whatever, you can have some nice chunks of change coming at you every week. And I'm not going to knock it. It's a legitimate way to go. It's just not my thing. To sit there, be bored out of existence forever, just drives me up the wall, personally. So what I like is called swing trading. And this name, I had to study a little bit to find out what it meant. Think of a circus, and you have these two poles that are holding up the big circus tent. Well, at the same time, those poles hold up the equipment for the trapeze artists. And on one pole, you will have some people at the bottom, and they'll be pulling a rope, and this young, lightweight guy, girl, whatever, goes up their little elevator to their platform. On the other side is this big, strong guy. And he gets out there, and he's the catcher, and he starts swinging back and forth. And these trapeze people, they have coordinated themselves. They have practiced, and they coordinate so that when one comes, the other will jump off. And in the process, they'll be doing all these flips and turns and wonderful, entertaining items. And sometimes they crash to the safety net down underneath, the protective stops that I talked about. Other times they go through their whole routine, and they end up back where they started from on their little platform. Everybody's cheering, waving their hands, hurrah, hurrah, hurrah. And the show goes on. That is the same concept. You invest, your investment does its thing, you get your investment out, and you're sitting at your computer right where you started, but you're a hero now. And your family is cheering and hurraying and all that. So that's where the term swing trading comes from, out of the circus. Okay. There are over, last time I checked, there are over 14,000 stocks listed on the New York Stock Exchange, the American Stock Exchange, and the National Association of Securities Dealers, NASDAQ. I would strongly recommend you only deal with those organizations. Penny stocks have wonderful potential, supposedly. However, potential is not money in the bank. I would run away from penny stocks. If you want some entertainment, go check out the movie, probably at your local library, or buy it on Amazon store, whatever, eBay. The Wolf of Wall Street. It's DiCaprio and Robbie are the two male-female leads. It is a fantastic story, and it is a true story of a guy that went to New York, sold penny stock, earned very huge commissions, and then his life fell apart. And it's pretty much exactly what happens for real to the customers in the penny stocks. Don't go there. There are other stock exchanges, Denver, Los Angeles, Vancouver, that are somewhat regional. And most of the smaller companies trailer manufacturers, guitar makers. They start in these regional exchanges, and then eventually they're merged into a larger company that is on the New York Stock Exchange. So stay with the good stuff that is regulated, has a uniform way of doing things. Your information's good. We can do that. Okay, now, fundamental analysis, technical analysis. Way back before computers, there was fundamental analysis. And it was a very hard way to get a handle on things. But it was the only thing that was available. You would go to your library, because it would cost, I don't know, $1,000, $2,000 to get this library of books printed on very thin paper. Morningstar, Barron's, Wall Street Journal, they were data services basically. And they would print this information on the companies. To find a company was really hard then. Newspapers talked about it a little bit. Stockbrokers, you had to have a stockbroker. There was no such thing as just jumping on a computer and doing it yourself. They would recommend things. You were required, if you were a sane person, to go dig up this information on what was what yourself. And there are a whole bunch of ratios. Today, the requirement was that you would do your fundamental analysis, and there are, again, on YouTube, books and information available. I'm not getting into it because these guys, they do it much better than me. By the way, speaking of books, The Idiot's Guide to Investing and Investing for Dummies. Those are two books. They're, I think, last time I knew, they were less than $25 each. Those are good basic books. And they do a pretty good job of explaining some of this stuff. If you have thoughts, questions, whatever, you can go to Investopedia, you can go to YouTube, and you can get a lot of information quickly, very accurately, and nobody's going to sell you anything. It's just helping you with your steps. Technical analysis did not come into being until the personal computer came into being, basically. I mean, it was there, but it was a bunch of formulas that were PhD theses, and it was a bunch of dusty stuff that sat on shelves and nobody ever checked it out much. After the personal computer came into being, all of a sudden, everybody was doing it. And this is the way that I recommend that we go. This graph here on the front of this book was a product of the whole field of technical analysis. When to get in, when to get out. That's technical analysis. Whether it's a good company or not, that's the field of fundamental analysis. An example of how these fit together, 10 years ago approximately, plus or minus, there was a firm called Enron. And they were an energy broker. And I don't know where they were located. I think it was Oklahoma, Texas, somewhere. Anyway, the price charts on Enron, they were just up, 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 up. And nobody sat down and did the fundamental analysis on it. If they would have done those fundamental analysis things, the numbers would have been so out of the norm that it would have raised flags all over the place. As it was, everybody was just looking at the technical information, getting excited, and eventually this was a house of cards, and the whole thing went belly up and went down the tubes. People went to jail. There was, I believe, one guy that committed suicide. It was the poster child of horror stories in the financial world. So you have to really have the two together. Speaking of fundamental analysis, because it is so time-consuming and so laborious for someone that wants to do it on their own, I strongly recommend that you talk to a firm called TD Ameritrade. The Ameritrade part came out of the early personal computer time. It was America Online had a blogging section where everybody talked. Eventually, America Online had a little trading thing going, and it was a very small competition for the brokers. And eventually, it got very interesting. Then there was a company in Canada, Toronto Dominion Bank, and they got interested and they bought that little America Online trading section, and it became TD Ameritrade. After that was their little baby, that was a product of people doing their own thing. And it scared the traditional financial brokers. They saw the handwriting on the wall. They were losing control, they were losing their monopoly, and everybody was doing their own thing. So there were three guys, they were in the Chicago area. I think they came out of the Chicago Board of Trade. They said, oh, if everybody's going to be doing their own thing and we're going to be out of a job, we've got 30 years experience each, we're going to create Think or Swim. They set up this brokerage service, and it has every kind of bell, whistle imaginable. It is most impressive. It outdoes a lot of professional sites. And TD Ameritrade jumped on it, bought that, put it into their little empire, and TD Ameritrade now is management and consulting. Thinkorswim is the brokerage service. They also picked up a company from Northern California called Invest Tools, and it's a good company. They have online training. I'm a product of their stuff, and I'm not going to badmouth them at all. I happen to think, however, this is a little bit better, a little more modern, but that's arguable. What I'm trying to get to, though, is that Invest Tools, when you put money into that organization, you have to have money on file, have an account with them. You then get the services of in Thinkorswim to do your brokerage. But they have absolutely the most fantastic technical analysis and fundamental analysis part of their site. There is nobody that does it better. Just to have $100 or $200 or thousands or whatever sitting there, no interest, is well worth it to be able to use that information. Speaking of brokerage services, I strongly recommend you go online to Webull.com. Webull. This is a financial organization that is bullish on the stock market, and, well, financial markets. They do primarily stocks, but they also do options, futures, foreign exchange, anything that the computer can handle without having anybody involved, zero charge in, zero charge out. That is kind of shaking the brokerage services up at the moment. They're good. And they do charge for anything they have to handle personally, like selling stocks short. That's another thing. Don't go there, don't do that. If you don't know what it is, that's fine. You'll save yourself a lot of grief right now. When you want to find out what it is, go to Investopedia. They'll teach you. It's a very simple concept, but dangerous. That's the bottom line. Okay, we are, oh boy, kind of at the end of this lesson. Next comes the historical stuff, which we don't want to get into. We don't have time. So this is the end of this lesson. Thank you very much.